What's up? This is Patrick from TSH FX Institute, and today I want to show you a little secret. It's called the market maker trend. This is how you identify whether you are in an uptrend or in a downtrend. So I'm having two moving averages on my chart. The sky blue moving average, that is our 50 period moving average, and the 200 period moving average is the white one. So whenever these two moving averages cross, it means that there is a change in momentum, which means that there is a trend change. So it will look like this on your chart, and it will be your confirmation. So what happens is, if you backtest this strategy, you will find it very accurate as long as you apply proper risk management to this. So what's going to happen is, you're gonna see something like this. Let me just draw a trend line here. What you are going to get is, you are going to get your peak formation high, which is the high of the week, or which is the low of the week. For example, I'm gonna get my peak formation high, which is like this, and then what I'm going to draw is, I'm going to draw this zone, which is my resistance. So from there on, we want to see where we can look for possible entries. So after this peak formation, I'm going to look for a reversal back into the range, which means that I will only trade in line with the peak formation. So this is a peak formation high. Let me change it. Peak formation. Peak formation high. So this is going to be my peak formation high. Peak formation high, we call it a peak formation high. So whenever I get this peak formation high, I know that this is the high of the week, or it can be the low of the week. So when I get these two crosses after the peak has been confirmed, I am going to wait for the market to move back to this moving average, which is a 50 moving average. The market can go to this moving average, or the market can go to the 200 moving average, and then from there on, we are going to get a drop back into the range. We're going to get a drop back into the range. So the market can go up to the 200 EMA and then drop, or the market can simply go to the 50 moving average, and then the market can also drop. So we are going to dive deep into the charts and see how we can get these entries. So if you want to have flashcards, which means that flashcard is a set of screenshots whereby you find the patterns and you are going to look at them each and every day, so you can have this kind of setups memorized. So this is a confirmation that you are in a downtrend, and you are only going to sell from this zone. So let's go into the chart and see what happens. So if we look at this, if you look in my previous video, we took a trade around this area. The trade we took was around this area, and it reached my target. This was my target. If you go into my previous videos, you will see this was my target, this was my entry, and this was my stop loss, and this was my target. So I used proper risk management on this trade. So let me go back to the chart and see what kind of setups that I get. So one of our setup is also a head and shoulder pattern. This is a head and shoulder pattern, so we can spot a head and shoulder pattern, and we can see the market closed just right above, just at this area. The market closed at this area, not actually the market, but the candle closed at this area. So this is where you would have been also taking your entry, and this is a confirmation. This is what we call a railroad trade, two candles of the same size at a level, at a strong level. So let me take you back to the charts and see how we can find those setups. So for example, this is our peak formation. So we get our M pattern here, which means that the market moved from here. Market came from an uptrend to this zone, and then the market gave me the first leg, and then the market came to give me the second leg, and then the market dropped. So this is called a peak formation. So let us just see what's going to happen from after the peak formation. Excuse me. Let's see what's going to happen after the peak formation. So when we get our peak formation high, this is the lock of our peak formation high. So when we get the lock of our peak formation high, it means that there is a change in momentum. There will be a change in direction. So as I said, I wait for the market to bounce back to these areas, to the 50 or to the 200, but the most stronger one is the 200. So we can see we got our peak formation, and then the market came to the 200 EMA, and then look what happened. The market dropped. The market dropped at this area. We got a massive drop. We got a massive drop, and this would have been our reward. This could have been also our reward. So this could have been our reward. We place our stop loss just near our entry, near the high or near the low. So this was our trade. So this was a very good trade. So if you find this kind of pattern, you can trade it blindly. So let's go back in the chart again and look what happened. So we can see this was our first trade that we took. Now we are going to go back to the second trade and see which pattern we got. So that was an example of a downtrend. Now let's look at the example of an uptrend. So if we see here, we had our peak formation. So this was our peak formation. This was, we got a very nice W. We got a very nice W. So we can see the market was trading downwards. The market gave me the first leg to the downside, and then the market came to give me the second leg. So this was my second leg, and then the market shoot right up. Market shoot right up. So this was a W pattern. We also call it a double bottom. So let me remove this so we can see now that we have our peak formation. So we can see what happens. So after the peak formation, what is going to happen is I got my 5200 cross just right here at this area. This was my 5200 cross. So this was my 5200 cross. Let me mark it on the chart for you. This was my 5200 cross, and then from there on the market traded upwards, came back to the moving average, you can see. So this was also a setup. The market came back to the 200 moving average, and then just look at this, all these pips you could have gotten. This was a very nice trade also they could have gotten. So as soon as the market hit the 200, the market is going to bounce back into the range. So let's check again for another setup. We got bounce back into the 50, and then the market traded back upwards. We got another entry again on the 50, and then the market traded upwards. So if we could have taken the first bounce, this we call it a safety trade, which means that it's a safety trade. It can also be a swing trade also. So let's go back into the chart and see what happens. So we can see here we got another bounce on the 200 EMA. We got another bounce on the 200 EMA, and this could have been also your entry, and look how many pips you could have gotten. Let's go back again and check what happens. We got another touch here on the 200. The market came back to the 200, and then the market gave us a nice W formation. So our entry could have been on the second leg of the W formation. So if you're unsure about this, you could have also taken your entry here after we get a shift candle back into the range, which is a confirmation also. So the market came to a level which gave me another entry here, which was again our 200 bounce. We could have taken this entry and placed our stop loss here, and then the market came back again to the 200. Just remember our stop loss is here, and after the market went up, it came back to the 200 again. So I had multiple entries. So that's how I will be able to also trail my stop loss. So if, for instance, if my stop loss was here, I could have shifted my stop loss upwards as the market is also gaining momentum to the upside. So this could have been another entry also. You can see we have a nice pin here at the 200, and this could have been our entry also. So you can see this is a very nice trade. This is also a very nice trade, this one. So we can see this is a very nice trade from here up until here. So let's go back again to the charts so we can find more setups. So this was an example of an uptrend. So example of an uptrend, I will show you again. Example of an uptrend looks like this. We get our 5200 cross. This is our 50 cross, and this is our 200 cross. So let me change my let me change the 50 to this color. So if we look at this, this was an example of this was an example of 5200 cross, which is now a buy setup. So what I get here is I get my peak formation. This is where I get my peak formation. This is where I get my peak formation. This is my peak formation low. So after my peak formation low, I'm going to draw this zone so that I can know that this is my support area. So we can call it a support, we can call it a double bottom. Each and every one has their own perspective on how they see the market. So I call it a peak formation, low. So after my peak formation low, I will wait for the market to shift back into the range, and then I wait again for the market to come to this 200 EMA, or the market to come to the 50 EMA, and then the market will shoot back up into the range. The market will shoot back up into the range. So this is the pattern that we saw. So this is our entry. We can also call it our safety trade setup. So we can also call it our safety trade setup. So this is how it looks. So I just showed you how the market moves in a downtrend and how the market moves in an uptrend. So now that you know that there is a peak formation low and a peak formation high, you will be able to know in which direction to trade and when to take your entry. So let's go back into the charts again so we can find more setups. So this pattern that we see here, this is our pump and dump setup, which I showed you that the market will create a level and then come back to this level and then give me some kind of, if you look into your 1 hour, you will see a very clear W, but if you go into the smaller time frame, there will be a lot of noise. But if you just look carefully, you will find that this is also a peak formation. This is a double bottom. We can also call it a double bottom, and we can call it a peak formation, or we can call it a turtle soup, or we can call it a pump and dump setup. So you can see the market pump and the market dump. So what the market do is the market create a sentiment in order for us to chase the wrong move. So this was a sentiment because most of the traders will already be in right here at this level. So they will be already be up, and then the market is going to hit their stop losses because the market know how many pips the retail traders, the market makers know exactly how the retail traders think. They know that most of the retail traders stop losses is 25 pips or is 15 pips, so it can be hit. So after this, the market, I told you that the market will come to this level and then create 3 trap pushes. So you can see we had our first push here, we had our second push, and then we had our last push here, and then the market should right back up. So this is normally where I will take my entry. I will take my entry right here, and this will be my confirmation candle. This little pin here, this will be my confirmation, and this will be my entry. So now that you know that how to find a peak formation and how to get sniper entries on a peak formation, let's go back again into the charts and see what is going to happen. So here I see another example of a downtrend. So let me go straight back to the peak formation. So here that we have our peak formation, we can see we have our M pattern, and then we see the first push back to the 200 EMA. This is my trade that I'm going to take, and we can see it's a very beautiful trade setup. This one, it's a very beautiful trade setup. This is a very beautiful trade setup. So this would have been our entry. Our stop loss will be just here, and you can see the market shoot right down. The market came back to the 200 EMA again, and then look what happened. The market dropped again. This could have been also your second entry, also back into the range also. So we can see the market moved in 3 pushes, push 1, push 2, and then the market gave me the last push, which was my 3rd push, and after that I got a reversal. Let me go back again into the charts. So I see another 200 bounce at this area, see another 200 bounce at this area, and we can see we have a nice W with a 5200 cross here. We have, let me show you, we have a nice W here, and then we have our nice 5200 cross, and then after the 5200 cross you can see the market came to this area and then bounced to the 200, and from there on the market shoot up. So let's look again. We have another entry here. We have another entry here after the peak formation has been formed. So we can see this is a peak formation which is my highest point. It can also be in a result of a head and shoulder pattern. So we can see here we have a little head and shoulder pattern. This is my left shoulder, this is our head, and this is our right shoulder. After that we got a 5200 cross right here where my mouse is pointing, and then from there on the market came to the 50, and then the market dropped. The market came back again to the 50, and then the market dropped again. So let's go back into the charts. So we can see here we also have another bounce on the 200, and from there on look what happened. The market gave us a nice drop. The market gave us a nice drop all the way to the downside. So this is Nasdaq, and I think this must be this must be January or February. Let me just see. This must be February. So you can see from the beginning of the year, look what happened. It's the same things over and over. They have the same pattern. So if you don't know how to spot these patterns, it will be very difficult for you in your trading journey. So let's see on another pair. Before we end the video, let's see on another pair if we really get the same pattern. Okay, we are going to check gold. This is gold, this is gold. Let's check gold here. Let's check gold. Let's check gold. So we can see right here we have our 50-200 cross right here. We have our 50-200 cross right here after the market gave us a nice head and shoulder. So this was a nice head and shoulder pattern. This one, market gave us a nice head and shoulder pattern, the same pattern that we saw just a few minutes ago. The market gave me a 50-200 cross right here where my mouse is pointing. Then the market gave me a nice M pattern, and then look what happened. This was my entry on the second leg. This was my entry, and then the market came back to the 200 EMA, and look, this could have also been your second entry, and you only make sure that your stop loss is on top of this high, and then as you see the market go downwards, you must trail your stop loss. So let's go back to the charts and see what happened. Okay, so we can see here we also have, we had a 5200 cross, and look here at this level what happened. The market came to the 200, and then this could have been your entry to the upside. You see, this could have been your entry to the upside. If you just zoom in, this will be your 5200 cross, and you wait for the market to come to bounce at one of these moving averages, and then you see a move back into the range. So just look at this massive move. This was a very massive move, and then the market came back to the 200, and then the market shoot right back up. So you can see this is like it's kind of like a swing trade. You can hold it for a very longer period of time. So then the market came back again near the 200. The market shot back up again. So this is a very important way how to identify your trend and to make sure that you trade in the right direction in order for you to minimize your losses and for you to maximize your profit. So let's try to see on the next coming videos if we can spot more of this kind of pattern. So from me, Patrick, this is all that I can give you guys for today. Stay tuned. So what I'm asking is only for you to subscribe to this channel, like each and every video, comment, and then hit the notification bell for more updates. So I hope you enjoyed this video and you learned a lot. Thank you.